have consistently moving forward?
About mortgage. So I'm dealing with an appraiser on one of the houses that I'm involved with. And he was telling me a story about his son who bought a house in Madison recently, or maybe still involved with it. And he got he won the offer, the son did, but he had the lowest price. Mm-hmm. I said, okay, then he must have had the best terms. And he said, yes, he waived the mortgage contingency. I said, oh, so then he went on to say, yeah, it doesn't have to appraise. I said, that's not the same thing. Waiving a mortgage contingency and waiving an appraisal is not the same thing.
Two different
things.
This
is an appraiser, and he said, basically, it is. And then I explained to him the difference between them, and he basically told me I was wrong. So I spoke with Anthony because I know I'm not wrong. And Anthony goes, no, I'm right, and the appraiser doesn't know what he's talking about.
So funny story, Lonnie. I met that appraiser this week for someone. Someone called me on Monday morning and asked if I could run out because they weren't feeling well. And so guess what? He was the same thing. He was like, I'm going to share with you that I don't know that I can get this to appraise because this is the comps that are here and blah, blah, blah. And by the way, my son just bought a house in Madison and his didn't appraise either. And he went through the whole thing.
Oh my God.
Lonnie, it would depend on the attorney review language and if there's an appraisal contingency in there or not. Typically, if you're waiving your mortgage contingency, you are also waiving your appraisal contingency.
Right.
Yes. So it just depends on what's in the contract. And I have this conversation with my buyers all the time. I have one just now that we're about to close on Friday. And that's exactly what she did. She waived the mortgage and waived the appraisal. I have another one who's doing the exact same thing. Your buyers just need to understand that if they get denied a mortgage, if they lose their job, they're still on the.
Mara?
We lost you, Mara.
We lost you, Mara.
You know,
I believe she was going to say they're still on the hook to purchase that house is what she was going to continue to say.
Yes, but that's not what he was saying. He goes to me, you mean then they're going to have to pay cash if they can't get a mortgage? I said, they're still on the hook. If you're waiving the mortgage, you're still on the hook to buy it. A lot of people
right. You're 100%
do it.
right, Lonnie.
Yeah, a lot of people will do that because either they've got a lot of money to be able to back it by cash, or they've already spoken to a mortgage guy and the guy says, yeah, no problem, we can get you a mortgage, don't worry about it. So that it looks sexy when you're putting together an offer to say, okay, I'm just going to waive the mortgage, which is different than what I did with this client, that we waived the appraisal, meaning we didn't care what the appraisal came in at, which is different than waiving the mortgage.
Correct. But if for any reason your client lost his job and couldn't get his mortgage, regardless of the appraisal, he could have gotten out of that deal without any.
Yes.
Correct.
Yes.
So that's the difference.
This appraiser apparently did not know the difference.
Right. Yep. Yeah. I met him, so I understand your pain.
I'm seeing him again today.
Oh, there you go. Yeah. So we're going to get into Anthony a little earlier or sooner into our meeting today, because I think there's a lot of great things that he could share with us in regards to multiple offers and things that we can do. But that is a very good point. And so, I know one of the agents had a similar situation where they had a listing, the buyer who won the house out of all the bids that came in, they waived their mortgage contingency because their parents had a massive amount of money in the bank and were willing to back up anything that they had. So if they couldn't get their mortgage, the parents were going to pay cash. So that was, again, a situation where it didn't matter. And it did underappraise and they had to move forward, but, they wanted to, and they were happy to do that. So yes, I agree. There is different, it's two different things for sure.
For my listing, I talked to him about the waiving the appraisal and all that, and we decided that that's not going to enter into picking who was the best offer. because I think, you get a month in and they can't perform because, the appraisal is $30,000 under, $40,000 under, and the people can't come up with it. Then you've missed the entire spring buying market. So we put in it that basically we're not accepting offers with appraisal waiving.
Well, Eric, there's something you can do, which is you can have a conversation or have Anthony have a conversation with that mortgage person that the buyers are using, and they could verify that, yes, they can indeed do it or not. So you can verify that information.
Well, they also want Anthony to verify everybody who puts in appraisal.
Right. Well, so that is something that can be done, just as an FYI as well.
But it just, putting that waiving the appraisal, to me, just can hurt the people selling the house, because it can waste 3 months of their time.
Not if they have if they can qualify for the funds.
Right. If they can perform,
I'm in the middle of one right now. This is what we're talking about, that it did not appraise for $45,000. My buyer is still very happy to buy this property, which is closing next week, and is grateful that we can do this.
Mm-hmm. And he had the money to bring in, so he's not even changing. So what Anthony's going to talk about in a few minutes is about changing the loan that your client is getting, so that maybe they're putting a little less down and they can take that money out of their pocket, but all different creative ways to move about. So so we'll have a conversation, but that will sort of help you with that decision, Eric. But thank you for sharing.
Yeah, so, honestly, Missy, I mean, I'm sorry, Eric, but I totally disagree with you. I would have definitely took an offer that waived it, because if you know it's not going to appraise, you got to know that that person has some sort of funds to justify, what they're going to purchase the home for.
Yes, right. And you want it, and
definitely, I have one right now too. They're waiving the appraisal, and it may come in about 5,000 or 10,000 short, and the buyer's willing to pay that difference.
Yeah, and your job is to get the most money for your seller. So if you're taking something less because they're not waiving it, or even if they're willing to waive it, is that getting the best or the most money for your seller? Because there's a way to verify that information prior to you accepting it as well, so that you feel confident that they can move forward. I mean, anything can happen to anybody, you know what I'm saying? Like we spoke about, someone can lose a job. It could be the best person that, the best candidate that you chose, and then something can happen during the process. I mean, I've lost a young person on spring break. The husband passed away while we were, about to close on the house. So there's things that happen, right? And that are beyond our control, but that's something that I feel is in our control, because we have the opportunity to verify that information. So, but like I said, once Anthony gets on, we can talk about that a little more. So welcome everybody. Yes, we're in the middle of March. We are in beautiful weather. God hopes that it stays this way, because I could live like this all year round. I'm sure a lot of you feel the same way. It just makes us feel so much better every day when we wake up to be in this. So quote for the week: fear has two meanings: forget everything and run, or face everything and rise. The choice is yours. So we can't forget everything and run, right? We have bills to pay. We have clients that we have to get to the closing table. Our passion is to make sure that people find their dream homes, and that we get them through the process with that least stress to them as possible, right? So we have to face everything and rise, especially in this challenging market. So, just stay confident and strong, and make sure, we got through the worst year of our life. We can get through anything else, right? I mean, next week will be a year since we closed down. So if we've gotten through the last year, we can do anything. Honestly, we can move mountains. So just remember that. And yes, we're in a challenging market, but we can adapt. We can move forward and make great things happen. So our birthdays for a week: Michael Elms is in tomorrow, and Carlos is next Tuesday. So happy birthday, gentlemen. And then our anniversaries: Victoria Meechin is 10 years, Carlene DiVincenzo 9, and George Tam is with us 2 years. So happy anniversary. So don't forget, we have our March listing madness going on right now. And this is to help you guys stay engaged and consistent in your business. That's the reason this was put forth. Everything that we do is to continue to help you grow your business and help you get through challenges and help you stay on top of, you know, everything that you need to do. So this is why we do it, but you have to make the commitment to you and yourself and your business every single day. So we're on Winning Wednesday today, and Winning Wednesday, especially on a day like today, would be a great time to go door hanging. You know, maybe you're looking in a specific neighborhood for a client that you haven't been successful in getting them a home. You know, grab some door hangers, put a nice little flyer attached to it, and go around the neighborhood. A great day to do that. Or your farm area, just letting people, you know, reinforcing and reminding people what you're doing every single day and what a great market it is for sellers. So this is the March Listing Madness checklist. I'm sending it to the agents as they put on exclusives. I'm checking off the boxes that I know that have been completed, but then you have to continue to do so. And then send it to me when it's complete. And then you will be put in for the grand prize of you and a lucky other person that will be spending 3 nights at the Weichert Celebration in Las Vegas. And that is with airfare, hotel, and registration. So again, we want to reward you for doing the right things and growing your business. So make sure that you are part of this program. And if you're getting listings, let's try to slow it down a little bit so we can take more advantage of the market and get some opportunities ourselves like we used to do. So Anthony, I said we were going to get to you earlier today. I just wanted to get through a few things. And again, low appraisal. This is something that we are hearing a lot of. So I think it's important that we dive right into, you know, what we're dealing with every day on a day-to-day basis in this market.
Sure, absolutely. So we'll kind of jump in just to kind of what's happening over the last week. You know, the data, again, continues to be positive in the marketplace. You know, the jobs report that came out with the new jobs last week, originally going into the report announcement, they were thinking that, you know, maybe it might be 150 to 200,000 new jobs, but they blew it out and almost doubled the numbers. So the unemployment rate actually went down last week, you know, not by much, but down, which is, you know, a good thing from the recent highs we had from the pandemic. So that's a good thing for the economy. And then they passed that 1.9 trillion you know, stimulus package too as well. So what that did was put more of the economy on the back of their heels. 10-year Treasury's been up again, and rates have been kind of moving in the wrong direction. So, you know, we'll kind of see how things go. There's a lot of concern about, you know, the heading that we're on right now, and if we could start getting higher into rate, you know, it could be problematic where, you know, where they thought that we might be hanging in these super lows. You know, obviously this stuff is day to day. You know, there could be a possibility that 4% could be on the horizon. So our buyers that are, you know, managing to a certain payment, getting out of their comfort zone, you know, willing to waive appraisals and things like that we're going to talk about, their payments could be $100, $150 more a month. So that's just something that we're going to have to kind of keep an eye on and see how things sort of go. This was a recent survey as of January. We've been giving you these on a month-to-month basis. You know, getting 51% of the customers to respond. You know, we're almost at 100% on, you know, folks and what they think about us and referring, you know, their friends and family, which is a great thing. So obviously, you know, we were talking a little bit about this earlier in the meeting, and we've been talking about this a lot lately, as it's not, you know, specific to a certain type of buyer or a certain type of transaction or a certain type of market. It's all over the place. I mean, Missy and I were talking about this yesterday where, you know, every new transaction that goes right now is setting a new high, right? It may not be setting a new record like they talk about all the time on $1 Million Listing, but it's setting a new high for that market, that street, that area, just because of sole supply and demand, right? So what we're going to talk about is just kind of like what a contingency is if you're not familiar with. You know, going back to what Lanny said, I think there's a lot of misconceptions, different understandings of things, depending on what the verbiage is, like Mara was talking about in language, it can kind of be perceived a variety of different ways. So, you know, that's really, really important to know. But, you know, typically, and I was talking to someone yesterday about this, if you're writing up a contract that we all utilize, and unless something is mentioned in the contract that doesn't specify, you know, about waiving an appraisal or anything like that, and unless something doesn't come up in attorney review, if a home does not appraise, typically what's going to happen, as long as you're protected by an attorney, because this buyer I was talking to yesterday didn't want to use an attorney, and I kind of threw this scenario out to them. But I mean, if you're not, you know, using an appraisal contingency at all, or you're not putting any verbiage in the contract or an attorney review, if a home didn't appraise, typically you would go back to your attorney and stress to them, you know, the concerns that you have, and going back to the seller to kind of, you know, rebuttal the value or reduce the value. And, you know, if you guys agree to disagree, you can kind of move off of that and kind of walk on the transaction and usually kind of do what you need to do. However, though, in this marketplace, we're seeing a lot of people put a lot of language in the contracts, from everything like we're seeing here with appraisal contingencies to inspection specifics or hybrid versions of the appraisal contingency. So an appraisal contingency states the buyer has the right to back out of a purchase of a house if the property does not appraise at a certain amount, typically what the purchase price is that they're agreeing to. If you're waiving the appraisal contingency, although the appraisal contingency are common in real estate purchases, they may be waived. They cannot be waived if the contract indicates government financing, VA, FHA, rural housing, or should not be waived if a minimum down payment offer. So we've always talked about people with low down payments, right? Now, just because people are putting 5% down doesn't mean they don't have any other money. Some people might be looking to purchase a home that maybe needs some repairs, and maybe they have $100,000 more in the bank, and they're like, listen, I need to reserve that for renovating the property afterwards. Again, that's where my job is, right? I need to be educating the client going, listen, you're putting 5% down, you're okay with private mortgage insurance, but if we undershoot on value here, or if you're putting verbiage in there of 5, 10, 20,000 or waiving the appraisal contingency, and we've consulted with the realtor and we say, hey, you know, we're about 20,000 above asking right now. We can go either way on this thing. Are you willing to come up with the difference? Yes, I am. That verbiage gets noted in the appraisal, the appraisal in the contract or in the attorney review letter. And that buyer is going to be not able to cancel if if the value doesn't come in at that number, or if they put a certain amount in there that they want to cancel on. So the buyer needs to be very educated on what's kind of happening there. There's been a lot of dialogue when kind of saying to a customer, hey, do you want to waive the appraisal contingency? And the person goes, oh yeah, sure, let's do that. But they have no idea what that really means. We can't assume that they are educated on that. You need to kind of be very repetitive in this marketplace. I'm finding myself over talking many times about the same thing to folks, because they'll say it just, oh, I agree with you, or I understand it, but they really don't. Maybe they're embarrassed. They feel like they don't want to ask again, you know, all the above. So I tell people, listen, if you don't understand, please tell me now. I have no problem repeating myself, because what you don't want to do is have a client get into a contract and then unfortunately they can't get out and they didn't realize what they were even getting involved in. So it's really important to know as far as how that stuff works specific to appraisal contingencies. You know, the bottom line is appraisal contingencies ensures the buyers are getting the appropriate value of the home they're buying. You know, that's the definitive what the appraisal is. That needs to concur with the amount of money they're lending. It needs to at least be the purchase price or above. You know, to waive the contingency can make or offer stronger in today's competitive market, as you know. So it's really critical that a buyer specifically knows what's going on. Before we go to the next slide, a big thing I'm hearing too as well is, you know, everybody's getting so caught up with the offer and the list price and just going above because we know there's multiple offers on it. Are we taking the step back to say, listen, you know, it's probably not going to appraise, Mr. Buyer. I mean, there's only so much we could do. I mean, we can go in 30, 50, 100,000 above ask, but at some point we're probably going to get out of that window where it doesn't appraise. I just want to make sure that we're telling the buyer at that point, like, hey, listen, it can go either way with 10 or 15 or 20,000 above what their list price is because the agent listed the price right or even slightly a little bit on the high end. We need to make sure the buyer's in the position to know that there could be a really strong possibility it may not come in. Okay. Are you okay with that if it doesn't? Because if not, I almost feel like we're sometimes setting things up for failure too as well, just to put a deal in also when we know this thing is not even going to come close in appraising. Like if we don't have comps to support that property, we kind of need to make sure we're all on the same page going in. So I think that's really critical in this marketplace, just to kind of say, rather than just throwing a number out there to somebody and yeah, let's just go out and get it. We don't know what the recourse potentially could put these customers in. Like to talk to Lanny on the transaction we went in on, we knew going in, buyer knew going in, listing agent knew going in, this thing was not going to come in. Now, we didn't know where it was not going to come in, but everybody was on the same page, hence why the buyer did the waiver, hence why he was educated and knew what was going on. So when it underappraised, we actually thought it might come in even lower, and it actually overappraised based on that number, which was a good thing. So it's a pretty crazy market right now on what we're dealing with, but making sure the buyer knows what's going on. And to Landy's, this discussion, the buyer's okay, happy, moving forward. There wasn't anything surprised or anything like that on his end. So that's really important to know when we're kind of going over this stuff with the buyers.
Anthony, I have a question.
Sure.
And Missy, correct me if I'm doing anything wrong. I'm dealing with a listing and I have a few offers. One of them, it's over the asking price. I did not put up front. I didn't ask anyone because I thought it's a discouraging message up front to say anybody willing to waive the appraisal contingency. But now I'm going to be approaching everyone separately. Can I ask them to do that? Are you willing, or your buyer willing to waive the appraisal contingency or no?
I'm going to let Missy answer too, but I mean, many agents from what I hear on the listing size are coming back to our buyer agents and asking those direct questions. So I don't know if that's not permitted, but I know it's being asked it on a regular basis. And I guess I would assume it would just be the answer could be yes or no, you know, or let me go back to my client and see. I mean, Missy, am I wrong with that?
No, you're not, because they're just asking. You're not requiring that they do it. You're just asking, simply asking based on helping them basically bring in a stronger offer for your, you know, and if they really want the house, then they can figure out a way to work that out.
So I would be a lot like, oops, sorry, I would be approaching him, asking him, I'm going through all the offers I have, and this is a question I've been asked to ask is your client willing to waive the appraisal contingency?
Or a portion of it.
Or inspections. Yeah, or inspections or anything like that.
I don't know about inspection. The inspection, I believe, to protect the seller, and I like to stick to that more than anything else. Because I don't want anybody to come back and he says, you know, we found this or that. I want it to be all the inspection done up front, and we agree on it. Is that right or no?
But some people are waiving inspections also too as well. They're coming in on the contract saying that we are going to waive all inspections, you know, subject to, you know, environmental or safety. And that would be the only thing that they would bring up. They're not going to bring up light switches and GFI outlets and, you know, other things like that.
Can I say something?
Yeah, sure.
Sam? So generally in a contract, we would put in, there are three main areas that we're interested in, both buyer and seller, and that's mechanical, structural, or environmental. And those are the things that we put in that we don't want to know about the light fixture. There's a difference between a leaky faucet and a pipe under the sink that is gushing water. Those are two different things. We don't want to be burdened down by all the little stuff. So we put that into contracts.
Yeah.
That's a good
the other thing, I put in my 2 cents. These people that are going to be coming and these contracts you're going to be going over, you're probably going to want to go back to them with their highest and best. And Missy has a list, which is a wish list, which you can give to each one of those people, which would have on it, you know, certain things that it's only for structural and safety and environmental conditions. It might be something about the mortgage terms, how much down. Missy, you have that list, right?
I do have it. Yep, I have the seller's wish list I could share.
That might be something that will help you going back.
To the office?
Yeah, I will share it with you. I have it in an email.
Yeah. That might help.
Can you send it to us again? Missy, can you send it?
I will send it to you again. Yes, yes, absolutely, absolutely.
One more question. Can we put a cap on the appraisal to protect the buyer? We said it's if we could waive the appraisal as long as not to exceed, let's say, $10,000 or $20,000. Is that possible?
Yes, yes, buyers do that as well. So that not every buyer waives the appraisal in total. Some buyers waive it up to a certain amount. They waive it as long as it comes to the asking price, or 10,000 above asking, you know, or 15,000 above asking, whatever they're comfortable with. Again, that's a conversation that buyers should be having with their mortgage lender, so they know exactly what they can and cannot do prior to agreeing to any of that. But yes, it doesn't have to be the full appraisal. It could be a portion of it.
One more question for Anthony, and I'm not going to ask anymore. I've been seeing pre-approval come from some of the bank. I walk in and it said, I make $500,000. I'm buying a house for this much. Yeah, here's your pre-approval. And in reality, it doesn't mean anything, because it happened with one of my transaction. We came back to Anthony. Anthony, he tried to run the numbers and it turned to be, oh, something wrong here. We're not qualified. So sometimes you get the pre-approval from a bank, and in reality, does not work. So how can we be sure the pre-approval letter coming with the offer, it's good?
You gotta get me involved, Sam. I mean, we've been saying this for eons.
You have the time to view if I give you the pre-approval letter, you look at it.
I'll call the lender directly and ask the questions. And if I'm not getting a warm and fuzzy feeling, I'll circle back with you and say, listen, they're not getting back to me. He's not answering my questions. But going back to what you were saying before, there are banks that you could walk into right now and say, I want to buy a house. And literally the banker / teller / whatever can print out a letter of pre-qualification or whatever based on just some quick questions. And they'll say, here you go, you're pre-qualified. Meanwhile, no credit was ran, no income was reviewed, no assets reviewed. That's a very scary thing. And that still happens all the time. And then to boot that, I mean, there are lenders out there that are just, they're busy. They're not putting the time in. They are a complete opposite of what we're doing from a consultative approach with our buyers and sellers right now. And they're just kicking out a pre-approval to move on the next. It's a weekend. They don't want to be bothered. Here it is. I'm going to take the call, not take the call. Yeah, you'll be fine. Make your offer. I was already pre-approved before. Yeah, you could use my $500,000 offer on a 420, not realizing the taxes are $8,000 more or whatever the deal is. It's just not being done correctly. And, you know, I know I about this all the time, but I hear from agents every day that deals fall apart all the time because of the buyer's lender. It happened yesterday in our office. You know, I mean, just yesterday afternoon, deal died because the buyer knew the lender. It was a friend of his. It's been a 4-month disaster with the agent. 4 months. Loan was supposed to close 3 weeks ago. Deal's dead because of just no control of the transaction. You need to control the sellers and buyers. Any pre-approval you have, I'd be happy to call them up and just, 5 minutes, have a call. Where are they at? What are their qualifications? We could speak mortgage lingo that you guys can't. And I can circle back with you and go, hey, they don't want to work with me, but I talked to the lender. You should be in pretty good shape on this. He's done all the right things and gone all through the metrics to make sure that they're the right buyer. But if you're not doing that, I'm not in the know. I can't really help you,
No, I really appreciate you offering this. I think you're going to be very busy. I mean, the old days, we used to tell them you have to get your pre-approval through Weicker because that's the only one I trust. I don't know if I could say that.
You can say that. You can
say that. It's your transaction.
Yes. You can say, this is my team and this is who I would like you to work with because I know that you're going to get the best service and we're going to get you to the closing table. I know agents who do that every single day, hands down, and will not, move from that because they control their whole transaction every single day.
Yeah. Well, the situation, I think, Anthony, you know what I'm talking about. Until now, we're still not out of it yet. We keep moving from one thing to another because the whatever the mortgage company, they miss something, you code it, we're still suffering from it.
Yeah, unfortunately, it's sad.
Absolutely. Yeah. So thank you, Sam.
Thank you.
But this is very important, this information right here for everybody. This is what I was sort of leading to at the beginning. So
here, I'm going to go through an example of like what an under appraisal looks like and what options potentially could be had, and a different variety of this stuff too as well. So, for example, let's say someone's buying a property for $400,000. And let's say the property was listed for $380,000. So they went in $20,000 above. They agreed to a $400,000 price point, and it's 20% down. So there's your atypical, conventional, no PMI buyer, 20% down, $80,000. The mortgage is to be $320,000, loan to value is 80%. And there's your principal and interest payment of $1,350. Appraisal comes in, unfortunately, at $380,000. So it underappraises by $20,000, right? Everybody goes into a huff, a panic. What goes on? What can we do? Deal's dead, blah, blah, blah. Well, keep in mind this too as well. A lot of times when houses underappraise, what's the first thing that buyers are going to look to do if they really want to get out of the transaction? They reach out to the lender and go, can you get us a declination letter? The attorney reaches out and goes, can you get us a declination letter? Keep in mind, the only way a lender can get, and this is across all lines, can get you a declination letter is if the loan doesn't qualify anymore and is declined, right? So for example, in the scenario I'm going to give you to kind of keep a deal together, because obviously that's our goal, to try to give buyers solutions and options, right? And everybody to keep the deal together. Let's say if the house underappraises by $20,000. If you move over to the right column there, the down payment in essence, all in, still remains at $80,000. So the amount of money that the buyer is planning on investing into the house is still the same. The mortgage amount still remains at $320,000. Keep in mind, as a lender, we're only going off the 380. So 380 to 320, that's $60,000 that's getting put as a down payment. So you say to me, well, Anthony, where's the other $20,000? The other $20,000 is being brought to closing. as additional cost to make that deal still whole. So the buyer is actually putting a little less money down, but bringing the difference to closing. The loan to value goes from 80 to 84%, okay? With that being said though, yes, they are required to carry, let's assume just in this scenario, a monthly private mortgage insurance of $55 a month. So yes, they're financing a little more, their payments going up a little bit more. The PMI can go away in about 2 years when that PMI were to fall off. And you know, the additional cost over a 2-year period is only about $1,300. So the good thing is we're able to save a deal on a $20,000 shortfall, still able to issue a mortgage commitment, buyers still able to buy. Yes, the loan's a little bit more costly to them, but assuming they still want to buy the transaction, there's still ways of making this, you know, negative on an appraisal really still positively work for a buyer to move forward. And that's on just an 80% scenario. You can even go up the ladder more, you know, whether it's only 15% down to go to like only, you know, a 90 LTV at that point. Yeah, as you go up in loan to value, the PMI starts to increase. And yes, the loan starts to get more costly. But at the end of the day, there are options to do with that. Going back to my slide before, that's why the 3% down, the 3.5% down, there's not a lot of movement there that a buyer typically would have some additional funds to make up that difference. Unless, again, they spoke to their lender and they were holding money in reserve, maybe to do renovations, or they just want to keep money in reserve and they could afford the payment. You know, are you willing to come to the difference because we can't finance more, like in this situation? So the good thing is 20% down buyers, if it underappraises by 20,000, we're going to have various options for them. Again, assuming they're not at their max qualification at 20%, assuming that if we add the $55 more a month in payment, it's not going to have them not qualify. And again, that's where I kind of come in with confirming and verifying that. But that's always a big thing to know, because a lot of times people always go, hey, can you get me you know, a decline letter on this? And I'm like, I really can't, because the borrower still qualifies for the slightly higher payment this way. Now, a buyer could obviously try to cancel because they feel that they don't want to pay a higher payment, you know, but that's a different conversation with attorneys on how to get out of a transaction. But we're not going to be able to get a declination letter if the house is slightly under appraises and we have a solution when it comes to that stuff. So that's always a question I always get from people like, oh, I'm trying to get a kill letter for something and the lender won't get it to me. Well, it's because they still qualify for the transaction. So you kind of can't get out of that.
So there's a lot of creative ways to continue to keep your client in to that deal.
Absolutely. You know, and obviously these sort of things are helping you get your buyers, you know, up that ring. You know, when there's 5, 10 offers on a property and you put the word appraisal waiver in there, I can guarantee you're probably in the top 3 immediately at that point, you know, if there's 5 and 10 offers, because people can't afford to do that. People don't know about it. People are not educated about it. But if your clients are willing to kind of have some kind of a variance to that, it's definitely going to put them, you know, way up on that ring to get a best shot at getting a deal.
Mm-hmm.
Hi, this is Lauren. Can I say something real quick?
Sure, Lauren, go ahead.
So this is a little bit related, a little bit unrelated. I had a buyer last week get their offer accepted. We're in attorney review, and I guess I'm just saying, make sure that you're also reading these attorney review letters and that you're using good attorneys, because we had the seller's attorney put into the review letter that they're waiving the appraisal, and we never agreed on this. So we almost signed an attorney review letter saying that we're waiving an appraisal when we never agreed to that. So just make sure that you're looking at them. I know it's like a sketchy thing, but they threw it in there and the attorney missed it and they almost signed it.
Yeah, and I think you're going to see that stuff where it comes up in attorney review, where then all of a sudden, like, everything that you thought you agreed to is different. And then all of a sudden they're trying to slide something like that in and saying, oh, no, I thought we were doing the appraisal waiver and stuff like that. Or, you know, and it's an interesting time. So yeah, you definitely got to make sure that, you know, your attorney is not missing that on the buy side for sure.
Mm-hmm. That was a great, yes. Thank you for sharing that. We do have to be on top of that. So our trivia question of the week, your favorite time of the week.
According to the survey by Realtor.com, what percentage of first-time buyers found out their budget for the home was larger than they thought it would be? A, 27%, B, 37%, C, 47%, and D, 57%. There's Lynn.
D, final answer.
D. I'm doing C or D.
B.
Wait, Carol, you got two answers? How'd that work out?
Carol, yeah. She's American status. She can do whatever she wants.
That's true too.
My first choice was C, but then,
all right,
you know,
okay. Any other takers out there?
I go with D.
Answer C, 47%.
Yay!
But seriously though, I mean, going back to the appraisal stuff, the pre-approval stuff, I'll let you guys know if I'm jammed up or I can't get the, validating a pre-approval, because I'm in the middle of something or working with a transaction or something like that. But protecting the house, I mean, I would try to be using that stuff as much as you can, or at least getting me the top 2 people that you think they're going to be in the running, right? I don't need to go call 20 people per se, but if you got some good offers out there and this is what the verbiage is, hey, Aunt, can we just make sure that if it doesn't appraise that they're going to be in good shape? I need to kind of just make sure from my seller's perspective, it doesn't take me long to chase down a couple lenders or reach out to a buyer just to kind of make sure we're all on the same page. So you guys can make perfect decisions for your sellers to move on, because the market's moving way too fast to kind of get caught up on all this stuff. It's crazy. And you should be using all the tools that you have, especially here, to make your deals kind of go through smoothly and not get jammed up last minute.
Yep. Thank you, Aunt. Great.
No problem.
So Anthony shared this with me yesterday, and this is in 2018, so don't get nervous. But at our mastermind, we were talking about, 2006 market versus today's market. And so one of the things when the agents asked, can you find what the mortgage rates were at that time? I'd be interested to see. So Anthony found this, and I like this chart versus the ones, with all the graphs, and you have to try to figure out where it falls in the lines. And so, this is so easy to read and straightforward. So it only goes up to 2018, but we know where we are today. We know where we were last year and the year before, so it really doesn't matter. So in 2000, the interest rates were 8%. And then 2005, 2006 were mid 5s hitting 6. So again, that was the difference between mortgage rates then versus now. So again, I thought it would be a good chart to share with you to really be able. So remember when I spoke about when I bought my house in 1989, and it was like literally 12% at that time. And I worked for a bank, and so I got it for 8, and I thought that was the best rate you could ever get in the world, 8%. So it's all relative. And we've seen way, way higher. I mean, look at 1982, 16%. Can you imagine that? Can you imagine 16% with the way the houses are appreciating now? I mean, so we're just in such a great, great, great spot. So thought this was a great chart to share with you guys. And, that's something that you can use, talking to your clients. So I felt like this would be a great introduction or a great time to have Amanda come on. Because Amanda now can talk about any of the legal things that you're going through with all of these multiple offer situations and things that she's dealing with. I could say single-handedly our office is torturing Amanda, not personally, but their clients. So, but she's a trooper. And so, I want to thank her for being here today. So welcome, Amanda Mulvaney.
Thanks, Missy. Hi, everyone. So yeah, basically some of the stuff that like Anthony was just saying, I was just going to piggyback off of that. And I know some of the stuff that Lanny said earlier as well. First of all, I think the key thing that I'm seeing is, and not so much from agents in your office, but I am getting contracts in often where the client has their version of what's in the contract and what's actually in the contract are two very different things. And, things like waivers of appraisal or waivers of inspections and what that really means. And I feel like a lot of people are putting things in. I mean, sometimes say like I have the seller and it's the buyer who's putting in waivers of things and whatever. And some agents are not having a conversation with the client as far as what those waivers really entail. And I sometimes see deals fall apart during review when that conversation is finally brought to a head and they understand what that means. And then when we try and clarify the language to what they mean, the other side gets pissed off thinking we're changing, the main terms, because these are multiple bid situations, right? And, the seller is picking the offer based upon all of those waivers and things that are being put into the contract. And then when a buyer tries to modify that during review, sellers sometimes pull out. So I'm seeing that happen when I sometimes explain to a buyer, or, you know, we put something in the review letter and the other side then explains to their client, you know, what that actually means. So one of the big ones I see with inspections, because I know Lanny brought this up before about waivers, is, you know, environmental, structural, and mechanical. But I get a lot of clients who also are concerned about electrical, and not a GFI outlet, but, well, what if the panel, like, there's a major issue, or what if there's aluminum wiring, or what if there's something really big that they're not aware of, and they still want rights for that. And I find sometimes when we try and clarify that, even just putting that in, we run into some sellers start getting upset. I know some people will put in safety also. You can, you know, we try and say substantial material defects. You know, sometimes people want to put a price on them too, like any electrical issues, you know, over, you know, $1,000 or things like that. So there's other ways that you can protect them and, you know, put it in. Just make sure that they understand that mechanical doesn't include electrical, technically speaking. And the definition of mechanical, if you ask 3 different people, they'll give you 3 different answers, whether it includes plumbing, whether it includes HVAC, you know, what's actually included with that. So just make sure that when you put it in there, that the buyer actually knows what that means. Like, you know, not just, oh, we're going to just put in mechanical, because everyone means, oh, we're not going to nitpick. And that's really what buyers are trying to say, that if there's something major, and I mean, I have that conversation as well with them, but sometimes there could be something that's not in one of those categories that are getting put into the contract. That would still be a legitimate request from a buyer. And I don't think the seller would necessarily have an issue with it if put in correctly. But when we change it during review to include that, I've seen sellers get very angry. And you know, that we're changing the terms of the contract. Meanwhile, the buyers thought all along we're saying, oh, we just mean we're not going to ask for anything major, but, you know, we want the right if there's some major electrical issue. So even like safety will usually cover like major electrical things, because anything that's a major electrical issue is usually safety related. So just be careful putting that stuff in, because I do see, you know, words can be, you know, they're subject to interpretation, and sometimes they don't adequately reflect each side's, you know, feeling on things. I had one also where a buyer said they specifically told the agent, you know, what their position was, and the agent put in these things and was like, oh, but that includes, you know, electrical, this, that, whatever. I'm like, well, it doesn't actually. So that's what they meant to put in, but it didn't actually get put in that way. You know, as long as you get the idea across in the contract and everyone's on the same, you know, on the same page, we can always massage the language during review. So, and, you know, if you're not in doubt, say, you know, won't nitpick to be revised in attorney review, you know, only asking for major items, or something a little bit more generic if you're not sure, you know, and we can always tighten it up as long as you have the conversation. And then getting back to something that Anthony was saying too about the appraisals and the people still qualifying. I actually put in my review letter, because I had this issue once myself many years ago, where someone was putting, you know, 10% down on the house, and there was an appraisal issue, not by a lot, and they did still qualify. It was just going to cost them more money. So, you know, I always put in, if there's no waiver of appraisal language or, you know, any of those discussions, I always say it has to appraise for contract price. The other attorney will usually come back then and say, only if it affects their ability to get a mortgage. I then put in the notation, only if it affects their ability to get a mortgage without any increased additional costs, such as increased, you know, points, PMI, et cetera, because that makes it very clear then that, you know, if it underappraises, they're out, basically, you know, that's the way to do it. Because Anthony's 100% right. They can still qualify sometimes for that mortgage. I mean, if they're only putting like 3% down or whatever the absolute minimum is, no, they're not going to be able to get it, because they, you know, they're still required to put a certain percentage down. But there are cases where someone can still qualify with an underappraisal situation. So that is something really important, you know, for people to be aware of.
That's a good point. Very good point.
Mm-hmm. You know, and right now, I'm seeing a little bit too, just for, a word to the wise for some sellers. If anyone has some deals pending, I've had this come up 3 times in the last week, and I think it's going to die down a little. Rates have gone up substantially, and I know they're still going a little bit, and I guess Anthony could probably speak more to it. I don't think they're going to be going up. We're going to see as much of a jump in the next, month or two, probably, that we saw in the last month. But who knows? But I have seen a lot of buyers that now are having issues where sellers aren't ready to close, there's issues coming up, and then their rate locks are expiring and they're no longer qualifying for the loans. So on some people that are really close with those debt to income ratios, it is just food for thought, I guess, also for sellers accepting offers and where rates end up going, how close somebody is, and if there's flexibility on closing dates, or if we're looking for a far out closing date, because people don't lock in that much, usually 60 days is like the max. So just be careful on those, because I have 3 right now. I have a seller who's begrudgingly paying the rate lock extension for my buyer because they will not qualify, and he's the one who needs the extension, not ready to close. And we had to get something from the lender saying, hey, they don't qualify, they're not going to qualify, that this is what it is. And we're trying to do a UNO, trying to get around it, and ultimately, he's paying $2,500 to close a week later. So it is a serious thing. Usually in the past we were more concerned with people who would get a mortgage withdrawn, mortgage commitment withdrawn due to loss of employment, things like that. But now I'm starting to see it more with buyers who are, with the rate locks going up, they don't have the money for the extension, or they're saying they don't, some of them, I don't know. But, I think in many cases, they really don't, because they're waiving so much with inspections and with appraisals and, all this other stuff. And then when it comes down to now you need to outlay another $2,500, a lot of them are just, they're tapped, they've had it, so, just a little food for thought out there too, as far as accepting offers. I'm not sure what the rates are right now, Anthony, or do you think they're going to still keep substantially going up, like the jump that we saw in like the last month? Or
I was talking to someone this morning about this as well. The challenge is we just don't know. We're starting to hit some certain ceilings, and we did this when the 10-year was at like 1.4, and then they were concerned about where it would go from there, and then it went to 1.5, and now they're talking if we crest over 1.6, we're going to get into like uncharted territories at that point, where 4% could be really on the horizon down the road. So it's really challenging, because the jobs report came out last week, and everything along that lines, they blew that out. They didn't even anticipate that many new jobs to be created. So obviously unemployment went down, and then the stimulus money coming out to the economy too as well. It's just putting a lot of positivity going on. So we'll kind of see how that stuff goes. I can't see us jerking that high, to be honest with you, but anything's possible. The market is just moving in such crazy directions right now. But to your point, I hope we either settle in at this or we come back a little bit. Because every buyer is pushing the envelope. Oh my God, I got to go higher. I got to get out of a different price point. And it's putting a lot of pressure on all of us, agents alike, attorneys alike, myself alike, where every debt ratio I'm running on a conventional loan is like literally, you could slide a piece of paper in between it just to make it qualify, So it's scary, because I always say this to everybody: if the wind blows wrong, or you have to relock because you don't have the money to extend or something like that, you may not qualify anymore. And it's scary because there are many people that are literally leveraging every dollar they possibly can.
Yeah. Which is another thing too. I had another deal. Make sure you again, use a good lender, talk to Anthony, because, I had a deal where, thank God, we had a good lender, and they knew that it was close. And when they had the appraisal done, they had someone, when an appraiser goes out, not all appraisers are FHA certified, but most FHA certified appraisers are also conventional. People don't typically, get the FHA and not conventional. And, if you have a good lender like Anthony, a lot of times if someone's close, they're going to make sure that it's an FHA approved appraiser that goes out there, just in case something changes. Because I had it on another file where, there was a change in the amount of the condo association dues, and the taxes were slightly off, and it was enough to, that they weren't going to qualify for conventional. We had to switch horses right before closing to FHA, but the lender had made sure that it was an appraiser who was FHA certified, so we didn't have to start from square one again, and they just had to modify, resubmit, and whatever. And, we were only delayed closing by by maybe about a week, not even, because, you know, they planned ahead. And, you know, Anthony's right. I see a lot where people are really pushing it. So, you know, as much as we put into, you know, I know my job is to, you know, try and tighten things up as much as possible in contracts, but I always tell people, you know, it's as good as the paper it's written on. And at the end of the day, if the buyer can't get the financing, they're not proceeding with the contract, you know. And, you know, I know there was some discussion earlier about, you know, waivers of appraisals and things like that. And I agree 100%. Have the conversations, have Anthony talk to the lenders, find out what kind of money they have, what to put down. Because again, I do agree that, you know, you don't want to just take a waiver without anything to back it up. I mean, I put in my review letters also, if at some point a buyer wants to waive the mortgage contingency, because technically they could, you know, they could at any time waive it. A mortgage contingency in the contract, all it does is protect the buyer and give them the right to cancel. So if a buyer waives the mortgage contingency, they still have the right to even get financing. They just don't have the right to cancel the contract if they're not able to get that financing. So people don't realize that waiving the mortgage contingency doesn't mean you're not getting a mortgage. I always specify that they're not getting a mortgage just to, you know, flush that out, because I have seen it where they're like, oh, well, we're getting one, but we're just not, we're okay with taking the risk. And I agree that you don't want your seller to be 3 months down the road or 2 months down the road and find out that they don't have the cash. So, you know, we ask for proof of funds. Agents will talk to the other agent, you know, you guys can get more information, have Anthony talk to their, if they are getting a mortgage, have them talk to the lender. But I always say they're not permitted to waive the contract without proof of funds and showing the ability to the seller satisfaction that they can actually move forward, so that this way, you know, sellers can make the decision and know what they're getting into and not finding out, you know, a month down the road. Because even if they've waived everything under the sun, yes, a seller does have recourse against them, but that's not the position that you want to be in. So communication is key, especially right now. Like Anthony said, everything's moving so fast. Everyone wants to get everything done. They want boom in and out. You know, sometimes people will be like, I want this out right now. And I say, I can't, you know, until, so sometimes there'll be days where I say, like, I can't take a deal today. I won't get this. You know, you're the 5th contract in the last, you know, hour to come in, and I have 3 closings today. And, you know, I'm not going to get to you for 2 days. So, you know, a lot of times people will get another attorney, but even the ones that are coming in, you know, everyone wants it out ASAP. And I'm like, no, I need to actually sit down and review this. I just sat down at my desk. I need, you know, 20 minutes and then I'll call you. I know you're anxious, but it has to be done right, because there's too many moving parts. And I see things like I know another agent was saying that they almost signed something that the attorney missed. You know, everyone needs to slow down a little bit. I know everyone's anxious, but you have to make sure it gets done properly. And people get upset sometimes, but you know, the extra 10 minutes or the extra hour or whatever to make sure it's done properly so that you're protected.
Yeah, that's a great point. That's a really great point, because things are speeding up at crazy speed right now, and we need to take a step back, and we need to slow things down. And we keep trying to tell agents that. Anyone have any questions for Amanda? That was a lot of great information shared today of what we're dealing with in the market. So reach out to Amanda if you have any questions. I know more questions that I've been receiving from you guys are more legal questions than they are ethic questions and compliance questions that I used to deal with. So again, you know, reach out. You know, everybody's busy right now, so you have to give people time to respond and get back. And, you know, she's always just a phone call away.
Yeah, and or send me an email, you know, even if you guys are writing up an offer or have a situation going on or how to address it or something, you know, I get them all the time where people say, how do I address this? We want to limit inspections, or we want to do this, you know, does this work? Is this, you know, how does this sound? Or, you know, shoot me a quick, sometimes even a quick email, if it's something like that, you know, I'll probably respond faster because I'm on the phone and half the time, you know, multitasking, you know, or leave me a message, say, you know, I have a 2-minute question for you on just, you know, what's put in here. And, you know, I will get back to you as soon as I can. So, you know, it makes my job easier in the long run too. If, you know, if things come in and everyone's discussed them and everything's written in the contract, that makes attorney review smoother too. So, but I'm happy to help anytime.
Thank you,
Amanda. I have a quick question about rental.
Yeah.
In the listing, they give us an option. It's like, would they accept dog, cat, call, or none, or okay? So sometimes I said call, and when they call in, if the landlord asks for, excuse me, for additional money to take the dog, I feel like it's, excuse me, I feel the landlord have the right to ask for that. But if I said yes, they will take cat or dog or anything, and then the landlord says, yes, I'll take the dog, but I need an extra $100. Do you think this is legitimate or no?
I'm not sure I 100% understand, but I mean, if you're asking whether, you know, a landlord can certainly, you know, it's fairly common that there's an extra fee, you know, if there's a pet or, you know, anything that's involved. You know, I would just, when you ask the initial question, just make sure that, you know, maybe ask this follow-up at that time, you know, is there any, do you allow pets, and is there any additional fees?
No, what I'm saying, on the listing itself, I have the option to say, yes, they will take cat, dog, call, or no, or yes. If I say yes, and somebody coming with the understanding, yes, you will take my dog, and then I'll ask him for an extra $100, says, you said you're taking a dog. Why are you asking for extra money now? Did that make sense, or still have the right to ask for the extra money?
Yeah, but I mean, so you should have that already discussed with your client, with your landlord ahead of time. So because we can't take more than a month and a half security in the state of New Jersey, that's why landlords now take an extra fee. So if I know someone who does $25 extra or $50 extra a month, if they have a pet, they'll allow the pet, but they'll take in an extra pet fee. So now instead of the monthly rent being $1,800, it's going to be $1,850. So basically what you can do is when someone's calling and saying, will you accept a pet? Because my client is has a pet, if it's the other agent, then you can say yes, but there's going to be an additional $50 a month fee. Please discuss that with your client and let them know if they still want to see it. So you should be letting them know up front.
Missy, I do this all the time.
Okay.
But when I check the box, I check call. I didn't say yes, we accept dog or cat.
Okay.
I check call.
Right.
When they call,
that's all you're required to do. You don't have to say yes. You can say required. I mean, you could say call and then have that conversation with them.
But if I check the box, yes, we'll take cat or a dog, isn't it upfront? I'm telling them I'm accepting the dog, and that
you still can do that and still ask for it when they
still have the right to ask.
It's still legal to ask for money regardless of how you put it in the MLS.
Okay, that was my question.
Yes.
Thank you.
Yep, you're welcome. All right, thank you again, Amanda. Thank you for taking the time, and thanks everyone for engaging and asking a lot of great questions today. So, yep.
I'm having an open house tomorrow. I mean, a live one for the first time.
Well, we're going to get to that, Phyllis. We're going to get to that. Yep, I got my open house and all that, caravans and stuff.
Oh, okay.
Yeah, so we will get to that. Thank you. So anyway, I wanted to start something each week, which is an agent spotlight. I wanted to highlight agents that are doing what we need to be doing every single day, the basics of real estate 101, and getting business from it. Okay, because everybody keeps asking me, well, I don't have any business, or how do I get listings, or how do I get that, right? But they aren't doing, when I ask them what activities are you doing, they don't really have a plan in place. So there's basics in real estate, right? I always say you have to have different buckets, right? In order to have a consistent business and a consistent real estate business. And you have to be invested and commit to all those different buckets. So I want to highlight the agents that are doing what they need to do and taking the time and getting success from it. So, low inventory sales activities, we have to take action every day. If you do, you will get results. So send me good news stories, talk to me about them in the office, and I will post them, not in the Daily Dose, but in ours. Well, we will do that as well. Post them in the Daily Dose, which Carlo sends out every day, but I'll also do an agent spotlight of the week. So this week I have 2 agents I would like to spotlight. Number 1 is Tabitha. She hosted an open house for an agent in her office 2 weeks ago, and was sent to that open house a Redfin agent. So an agent reached out, got a Redfin buyer's agent, and that Redfin agent said, why don't you just go to the open house and then let me know what you think? Okay, that's how they run their business without accompanying them. So long story short, not only are they no longer working with Redfin, they are now Tabitha's clients under contract at a home listed at $950. okay? So that open houses are really, really important part of our business. Last week, we sent out a request for an open house and no one responded. So we can't start getting, you know, comfortable. We can't say, oh, everybody has an agent that comes in there. It is not true, because I hear story after story after story, week after week, from agents who are doing them consistently. And yes, a majority of them have agents, but there's always going to be that one or two that don't. I did it consistently as an agent when I was active in real estate. And yes, I didn't base it on, I based on how much business I got within that year I did it. So if I got 3 pieces of business from doing an open house every single weekend, that was awesome for me. That's another piece, right? That's relationships I built. That's going to be referrals in my future. You know, hopefully they have family and friends they're going to refer to me, not only them when they decide to move. So that's what you have to think about. You can't think that every week you're going to get an opportunity at open house, because that's unrealistic. If you get 3 in a year, 2 in a year, 5 in a year, that's amazing, right? And that's going to just spiral and get you more business in the future. So congratulations, Tabitha, for doing a great job and consistently doing open houses, even in this environment, and getting yourself under contract with a great buyer.
Perfect.
I also want to say congratulations to Eric Troutman. So Eric came back, right? He rejoined us again and trying to build up his business. So he consistently sits at the front desk. That's one of the things he does to grow his business, along with other things with the My Weichert tools. So sitting opportunity last week, received a call. Hi, I'm Mr. and Mrs. Seller in Parsippany, and I would love to list my home. Could you come over? So Eric prepared everything, was well prepared, went over that day, and they signed the listing that day for $500,000. So when you're saying, I don't have listings, I don't know how to do this, opportunity time sucks, open house time sucks, if that's your mindset, then that's how you're going to go into it, and it's not going to work out for you. But if you go into it saying, if I can get 2 or 3 a year from sitting these activities and fill another bucket, you know, so I can continue to keep a consistent business, then you're going to reap the rewards. Actually, Eric got a second opportunity this week, sitting opportunity time, another listing opportunity. Okay. So again, maybe those are the 2 he'll get this year. I still think it's a great one. It's still relationship building. It's still opportunities he's getting. You know, it's always, you have to be doing all of these consistently. So thank you, Eric. And congratulations on getting a great listing in Parsippany. Oops. My thing was slow. Now it's too fast. I also want to say congratulations to these agents here. So Weichert Realtors is put together a top agent panel that is meeting within the next few days. And they're going to be going over what's going on with Zillow. And they're going to be going over what's going on in the current market and challenges and how to overcome them and collaboratively work together to roll out some new things for all of the agents to help everybody be successful this year. So out of 7,000 agents within Weichert Realtors company, the top 300 were the ones who were called. And these are agents from our office that are in the top 300 out of 7,000. So should be very proud. And congratulations to Jackie Skura, Mara Glauberg, Brenda Lee, Cheryl Towie, Michael Elms, Kim Brechka, Gloria LaForgia, Vin Datwani, and Jen Pickett. Congratulations, guys. It's amazing to be in the top 300 of our company. And you did amazing things, and hopefully you can provide amazing contribution to help everyone get through the next year and moving forward. So I just wanted to give a shout out to those agents. So some things I just want to remind you of: you cannot put no showings in a MLS active listing. Okay. So if the MLS is in active listing status, or the property is in active listing status, and you've had multiple offers, you cannot say no more showings or no showings, because if it's inactive, you have to cooperate with other brokers. Okay. So you cannot ethically put that. And agents are doing that day after day after day and don't understand why. So remember, you cannot put no more showings. Okay, that cannot be put there. You can mark an attorney review. You can mark it under contract. You can do things if you don't want them to come. You can say call the agent directly to make an appointment, and then you can tell the other agent. Unfortunately, my client does not wish to have any showings at this time because we received 15 offers and we just got one under in attorney review. You can do that, but cannot write it in the showing instructions or anywhere on the MLS listing. Okay, so remember that. And then another reminder, variable commissions. If you are making if you have a deal set or a agreement with your seller, which I think is one of my biggest pet peeves. I never did this when I was an agent, but a lot of you do this as a regular practice. So if you're going to put in, 6% and 5.5% if I bring the buyer, or 5% and 4.5% if I bring the buyer, that's a variable rate commission. Okay. You have to mark that in the MLS as yes. And the reason you have to mark that is because you have to give the buyer's agent the opportunity to know that you have worked something out, okay? So that they can decide to share that with their buyer or not, knowing that you have a little upper hand that you're able to play with your commission where she's not allowed to play with her commission, okay? Because of the way that it's done. So this was something that reminded me, I was stepped in for a multiple offer situation for an agent last week. And one of the listing agents, before she sent the offer to me, gave me a call and said, I have two questions for you. Number one, I want to ask you, is there a variable rate commission agreement with the agent and the seller? And I said, no, there is not. But it was a fair question to ask because I would think that probably only 50% of the agents even mark that off if they have an agreement, whether they know they have to or not, that they're not doing it. So I think that's a fair question to ask. I do not have to disclose what that agreement is, just yes or no. So you don't have to disclose what your agreement is. You just have to disclose yes or no. So it really, I bring this up all the time. It blows my mind that Marissa Poston got a opportunity last week as a lister, 6%. Eric Troutman went into this person's house, 6%. Lori Kaplan, really, really big on getting 6%. Okay, so how can they do it, but everybody else has to reduce their commission to get a listing? It doesn't make sense to me, right? So somehow they're providing their value up front so that never becomes an issue, right? So you really have to think about how you're presenting yourself at the listing presentation and the value that you're providing. Because, getting 6% in this market, I think is huge. And we have to stay like that. We can't keep reducing our commission because other brokerages are doing that. Because before you know it, you're not going to be getting paid anything. And then you're going to be more frustrated than ever. So we have to be the one that sets precedents, and we have to stay strong with what we are giving them and what we are getting. Okay. And you can get it. We see it every single day. I'm seeing 6% come into our office.
And we don't have to, like I get 7% a lot. If I'm taking 4 and giving 3, that's not a variable commission. Like you don't have to tell them you're making more than them. Right?
No. It's only if you have an agreement, if you have an agreement with that seller that you're going to reduce that commission in some form if you bring the buyer. Okay. So if it's a different commission versus Brand X bringing a buyer and you bringing a buyer, or however you work it out. Okay, so that's really important. And just call me if you have any questions in regards to that. So Stephanie, I know you didn't have much to go over today, but
Good morning. Yeah, I have a couple of things. I have some slides in there. I'm not sure if you got them, but just a quick reminder, tomorrow we have our bi-weekly MTS regional workshop, and we're going to be going over seller landing pages. And actually, I'm presenting first tomorrow. So appreciate it if you guys try to be there. It will be recorded. We're going to be, again, using Microsoft Teams because of the participant. It's a little bit of a larger participant, participant amount of people that can be on it. So just, if you can be there, it's 9 o'clock tomorrow morning. I sent out the link. I'll send it out again today. Miss, you didn't get my slides?
This was it. This was what was on here.
Oh, weird. Okay, so I had slides, but I'll send those out separately. I just wanted to go through real quickly, and I know we're kind of going over anyway, so it's probably better off just sending out mass emails, scheduled mass emails, so I could share that with you separately. But do you guys have any questions about anything that might have come up in the last week?
Stephanie, I do.
Okay.
How do we get KV Core to add an input line? When you do the Excel spreadsheet, and you have city, zip and all that, that they can put something in for unit or apartment number, so we don't have to.
There's not. No, unfortunately, you have to combine the columns. I can show you how to do that. There's a trick.
No, I know how to combine them, just instead of having to do that.
No, there's not. Unfortunately, KV Core doesn't have an area for what would we call address 2, so line 2. Because it's not a mail marketing program, it's an email marketing program, so it wasn't really meant to keep primary addresses, only really for information. But you could put it in as a note for the person, or again, combine the columns together.
Yeah, I put it as area.
Right. So again, you're not going to be using it for mailing, so it's not really going to be much of an issue. But actually, I have a success story that I would like to share. One of our top producers sent out a mass email in her market area. I'm not sure how many she used, probably a couple of hundred. And she was utilizing just the email marketing portion of KV Core, and she actually got 2 listing appointments. It was a really great, it's really good when you get the appointment, so that, it's a really good foot in the door. I'm glad that, that's working out for her. So that's good.
Yeah, and that's something I shared with you a few weeks ago, guys, that Jill Southern had sent out and gotten 6 listing appointments. And so this agent said, well, she can do it, I can do it, took the time and did it, and got 2 listing appointments, went on 2 listing appointments this week. So there's so much opportunity out there, but you have to take action. You have to do these things, and we're here to support you and help you do it. So just make sure you're taking advantage of that. So our local market absorption rate, obviously still at record lows. I mean, like I've never seen before, just unbelievable. Everything is under 2. Everything is under 2 months, a lot under 1 month. So new listings on the market. We have Diane Ladrago has 18 Iroquois Avenue in Parsippany at $364,999. Not sure if that's still available. Eric, tell us a little bit about your new listing. This is the one you got off Optime.
That's not the picture, but it's a 4-bedroom, 2-bath. It's on South Beverwick, so it's a little busy road, but there's a lot of space, a lot of storage in the house. The kitchen is gorgeous. We have an open house this weekend. There's a hot tub, big deck out back. I mean, it really checks all the boxes. 2-car garage. There's, the only drawback is the street. If you put this anywhere else, it would probably be $100,000, $200,000 more.
Well, then that's great. Then you priced it right, and hopefully you get a lot of attraction this weekend. Congratulations on that again.
Thank you.
Missy, do you mind if I share my slides with you, because you're pulling up old slides? I'll show you. I don't know why, for some reason it's reverted back to the old slides for some reason. Okay. Can I show you my slides that I did?
Sure.
Because there's a lot of homes on here that you're not showing at this point.
Sure. Oops. Wait. I stop sharing. Okay, you can do it.
Okay, thank you. Sorry about that. I'm not sure what happened. Can you see my slides?
Yeah, can you make yours bigger, like go in the back and just make it the full screen?
It is on the full screen.
No, meaning down here, like if you click this little icon, 3 icons away from under where Eric's face is, it'll make it a full.
Is that better?
Yes.
Okay, go ahead.
So Leo, I'm not sure if you're on. I know you got a new listing that came on in Morris Plains.
Yes, I'm on, Missy. This is 4 Cambridge Road in the Powdermill Estates area. Price at $560,000. Is a split level, 4 bedrooms, 2.5 baths. And I did an open house 2 days after I got posted the listing. It was not ready, but when I got in there on Sunday, it was as if a fairy godmother came in and waved the wand, and it was so clean that I took new pictures and videos that I will be posting since. So I'm doing another open house this Sunday from 11 to 3 p.m. Yes, 11 to 3 p.m. So it's a Wykert exclusive right now, but we have probably a week to 10 days of exclusive, and then next weekend it will be an open house for everybody. So please bring your buyers if you have any.
Yep, exclusive there. If you have a buyer in that price point, get them in so they're not in a crazy multiple offer situation while you can.
Leo, if you can, send me your sheets for that so I can put them at mine, because I think we can cross.
Yes, Eric, I was really amazed at how you did your presentation on your listing. You had a link there. I'm trying to learn how to do that so I can link all the pictures and the videos.
Well, set time aside with Stephanie, and I'm sure she can help you with that.
Okay, we'll do. All right. So Eric, I'll send you the sheets. Okay. Thank you.
Okay.
Joanne, if you're on, I know you were on earlier. You relisted 37 Buckley Hill Road in Morris Township for $950. This is a gorgeous, gorgeous home. I remember when it was on prior. I know it did take an offer, and then things fell apart. This was earlier on in the fall, and so it's back on the market now. The Elm Street Group, Michael and Priscilla, have a new listing exclusive. I believe it comes on the market officially today, if I remember reading it properly on Facebook, at 28 Sylvan Drive in Morris Plains for $539. And then Catherine Adcock recently listed 22 Oak Park Drive in Morris Township for $1.150.
Missy, Missy, it's Priscilla. Sorry, we're gonna 28 Sylvan is gonna be $529 for the price.
Okay.
Yeah, and it's 3 bedrooms, 1.5 baths, 1 car garage.
Awesome.
Really cute
There's
house.
Is that number 6 in? Is that like the 6th piece of inventory in Morris Plains? Because there's so little inventory, it's ridiculous.
Yeah, there's yeah. Last I looked, I think there was like nothing in this price range, but yeah, so it's very, very low inventory.
That's awesome. That's awesome. Good luck with that.
Missy, can I jump in about Buckley Hill?
Sure.
Sorry about that. I've been losing my connection back and forth all morning. Hi, everybody. Buckley Hill is 37 Buckley Hill. It's located in Butterworth. It's an 1.5 acres, 5 bedrooms, including an au pair suite, which has a separate entrance. There's a 1,300 bottle wine cellar, a giant walkout, gorgeous lit basement to a patio, 3-tier decks, stunning fixtures. It's all, the prior owner was an interior designer, so even the light fixtures are $2,000, $3,000 each. The kitchen is beautiful. It has a pot filler, cooling drawers, a center island, 2 ovens. One of them's a Viking stove. And then there's a breakfast room with sliders to a deck. The floors are imported from a castle in Paris. This terracotta floors. It really is a beautiful home, and it's built really well. Don't miss it. English gardens in the back too.
Yeah, it is stunning. It is absolutely stunning. So that's a
Here
great
I
home.
am. Can I find it on mine?
Of course.
Okay, good. 22 Oak Park Drive. It's in condensation, and it is probably underpriced, actually. It's a lot of house. It's about 5,700 square feet. It's really, really remarkable. And I listing this house. Wow, what are we watching now? Listing the house was interesting because I thought that the upper price points were not going to get as much activity, but it's getting a lot of activity. I'm kind of shocked at the amount of showings I'm getting. But it's a really great house if you have somebody that wants, like, all the bathrooms are gorgeous. I mean, it's really just in great shape and a great location, 3/4 of an acre. It's just really lovely. So.
It looks stunning just from that entrance photo that you shot. Awesome. So good luck with that. I'm sure it'll go right.
I didn't shoot it, by the way.
Well, I meant that you had shot. How's that?
I'm the worst.
Yeah, you and me both. No, congrats. It's beautiful. So Jackie has 18 Cooper Drive in Boonton Town for $650. Oh, this is, oh,
Missy,
you're
can I talk about my listing?
Oh, could I do my open house, Missy?
Yeah, yes.
Hello?
Yes, let's just do, we're going to finish listings and then we'll get to your open house. I promise you.
Oh, I thought you were finished.
No.
No.
Anyone else have a new listing coming on?
Yeah.
Okay.
255 Reservoir Drive in Boonton Park. It's 5 bedrooms, 6.5 baths. It has a full finished walkout basement that has a living room, kitchen, dining room, 2 offices, full bath, laundry, and it walks out into the backyard, which is a huge patio with another kitchen and a pavilion. It was originally the builder's house, so it's packed with upgrades, and it was built in 2011, so everything is fairly new. So it's listed for $899, and it's not ready to be shown yet, so it's coming soon. Hopefully they'll have it together in the next 2 weeks.
That's awesome. That's awesome. So guys, again, you have somebody looking in that price point in the Boonton area, you reach out to Lori, you have the first opportunity to get, you know, information and your clients out there. Congrats, Lori. Anyone else have any listings coming on?
I have to rental. Go ahead.
Go ahead. I'm sorry.
I have to rental collection at Morristown. It's located in Morristown, but it's Morris Township. 61 Gearhard Lane. It's 3 bedroom, 3.5 bath, living room, dining room, family room. It's a huge unit. It's bigger than a house, brand new. It's ready to move in. 2-car garage. It's for rent for $5,400. It's a middle unit and unfinished basement. It's about almost 3,000 square feet or around 3,000 square feet. Also, I have the model, which will be ready in March 20. So the model, the one the builder have, will be ready on March 20. It's 3 bedroom, 3.5 bath, living room, dining room, family room, finished basement, and end unit. That also for rent for $55.
Okay,
so if
great.
anybody have any, these are brand new.
And these are these are across the street from the ShopRite in Morristown. You know,
yes,
where they're just building those that new community.
Yes, and the address of the second one, the end unit with finished basement, is 1 Gearhard, and it's a cul-de-sac.
Great.
It's beautiful from inside.
Thank you. Cheryl?
So I listed last night a 3 bedroom, 1.5 bath in North Plainfield. You can move right in. It has a couple bonus areas. There's a den/office on the first floor, and through the 1 bedroom, there's a really nice bonus area upstairs in the attic. It's a corner lot and has a nice size yard too. So it's $365 if anybody's down in the Somerset County area.
Great, congratulations.
Thank
Anyone
you.
else have a new listing coming on? Okay, Phyllis, share with us your great new Brokers Open in Livingston tomorrow.
Yes. I am having a Brokers Open tomorrow on Thursday from 11 a.m. to 1 p.m. and you're all invited. I'll have some snacks and a raffle for you and make it as wonderful as possible. The house is in the process of being finished. It was originally being built for the builder, but he decided not to move in. And it's a huge house. It's over 5,700 square feet, just on the first and second floor. The basement is over 2,000 and it's finished. The kitchen and the bathrooms are on their way. It's on a cul-de-sac. And you have to go down Route 10 and just make a right on Walnut Street. It's at 28 Walnut Street in Livingston, and I will send you a flyer. And you're all welcome. Thank you.
Thank you, Phyllis. Anyone else have anything they want to share?
How much is the house, Phyllis?
Oh, that's the big one. 1,850,000.
Oh, wow.
So anyone have
Did you
anyone in
take a
that
deep
price
breath,
point in
Howard?
Livingston?
That's so good.
That's so good, yes. Anyone else have anything they want to share? I know we went long today, but we
Well, I
have
just
so
wanted
much
to
going
thank
on in the market.
you, Missy. This is Leo. I just wanted to thank Stephanie for her help with my, posting all those pictures. Couldn't have done it without Stephanie. And congratulations to Eric on that listing that you got on the desk.
Thank you, Leo. Very nice. Yeah, thank you. Everybody needs to utilize Stephanie to help you get to the next step in your business. So have a great week. Enjoy this gorgeous day. Don't forget Phyllis's Brokers Open tomorrow. If you can get out, it'd be nice to see people and get over there, and have a great week. Thank you guys for attending.
Thank you.
Thank you, Missy, and thank you for all the help.
Thanks, Missy.